Good morning, guys, and welcome to the show. Listen, I'm really glad to have you guys here. Today is Monday, September 7th, 2018, and we're going to get started. First off, we're going to look at a plague. That's right, I said a plague. And we're going to see where it is in the world, where it's most infected. Okay? We're going to take a look right now, and here it is. I'm going to put the screen on when we start the charts. Right, let me see, right here. Okay, here's the world, and here is the countries that are infected with this plague. Wouldn't you say it's pretty bad? This is actually a map of the Bitcoin accepting venues around the world where they're accepting Bitcoin the most. Okay, but you can see it's spreading like a plague. Bitcoin is like a plague. It's spreading. There's no stopping it now. You can see if this was real plague, we would be in big trouble in the world. But that's what Bitcoin's doing. It's not going to stop. It's not going to stop. It's going to keep spreading. When I say Bitcoin, I'm talking about cryptocurrencies in general. They're not going to stop until this whole world's infected with this. It's going to become the world reserve currency. Okay, but now let's move on to the financial markets now, and let's expand the charts. And what we're going to do is we are going to start with bonds and rates. Guess what? Bonds are on the move. You know, a while ago, I said that when bonds pass, the U.S. 10-year passes 3.25%, that the market is ready to collapse at that point. And the thing is she's crossed the 3% boundary now, and it's on the move again. I marked it a few days ago when it started to get on the move again. We're going to take a closer look at the U.S. 10-year right now. And this is very important stuff. We can see that she was on the move. November, December, it started. It started around December and the first of the new year. When we entered into 2018, she went up, and she went up fast through February and March. But then she leveled off in March, and she just kind of stopped and stalled. And we had tremendous amount of bond buying through April, May, June, July, August, September, all these months. I thought it would go up and exceed 3.25% way before now. But now it's finally started to move again. Okay, it's on the move. Bond yields now are on the move again, and we could very well exceed that 3.25% and stimulate our market crash. The stock market is ready to crash. It's pumped up even higher than it's ever been. Well, I mean, it's not quite to its all-time peaks, but still, you get the point. It's completely oversold. So now, let's move in and let's take a look at cryptocurrency today. Cryptocurrency right now is just kind of stalled along, and it's kind of not really doing much of anything. Neither going up, neither going down. There's a couple whales who have opened up their wallets, moved a few coins around. That shook the market a little bit, scared everybody that they might sell and cause another fall in the price. But as far as I see it, they're only going to create a buying opportunity. Eventually, Bitcoin's going to win. It's going to become massive. Bitcoin and all of the other cryptocurrencies. So I see these as good investment opportunities if you can buy on the dips. Cost average and buy on the dips. It's basically my strategy. And there's two coins I'm buying. I'm buying Litecoin. Primarily, I'm buying Litecoin, to tell you the truth. Buy as much as I can, and a little bit of Bitcoin. And I'm forgetting about all the rest, because I remember back when when Litecoin and Bitcoin first were back when, you know, and Litecoin was gold and Bitcoin was silver. And I don't think they've changed that. I think the Lightning Network is going to make these coins pop at some point in the future, and all you got to do is HODL them. And if it fails, don't invest more money than you can't afford to lose. That's simple, the way it should be. Now, let's take a look at cryptocurrency market capitalizations today. The market cap is creeping up. Remember, it did go down below $200 billion. Now it's back up above $200 billion, $201,839 million, with Bitcoin dominance at 55.4%. Here we go. The coins are a mixed bag today. Some are in the green, some are in the red. Let's take a look at Litecoin. It's $55.90. It's down 1.24%. That's pretty good, you know. That's pretty good for Litecoin. So now I mean, that'll buy you a whole Litecoin. I mean, what would $55 buy you in Bitcoin? Not very much. I don't even think it'd buy 1%. Not even 1%. But it'll buy you a whole Litecoin, a whole one. A whole Litecoin. Silver price today. Silver price is moving upwards a little bit, but it's just retracing where it's been a few days ago. The blue line was 2 days ago, so you can see it's just retraced back into the territory where it's been. It's at $14.16. It's up 13 cents, and primarily the reason why it's up today is because the dollar's down. The dollar's down a little bit today. Well, we're going to get there, and we're gonna take a look at the dollar in a minute. It's 10:26, so I'm staying clear of the Dow Jones just for I got 3 more minutes until the market opens. So basically, I'm just going to have to bumble along here for 3 more minutes until this market opens up. Anyway, let's take a look at oil today. Oil is $69.39. And you know what they've been doing with oil? And I believe it's OPEC and Russia together. I think they're in collusion. They're working together, the whole bunch. The Russian, Iran, they're all in China, and all of them working together, and they're all controlling the oil price. And I think they've decided to keep it between $65 and $70 for sweet light crude. And whenever it starts to go above 70 on sweet light crude, they smack it down. And whenever it goes below, too much below, gets down too much around $65, they smack it back up again. And well, they can't smack it up, but you know, you get the point. You know, they're keeping it between that range, between $65 and $70. You know, eventually down the road, this is an oil-based economy. And oil is the most important commodity of them all. It's more important than gold, more important than silver. And ultimately, down the road, it's going to get the cost for getting oil out of the ground is going to get higher and higher. And the country that has the biggest oil reserve left of all the oil reserves, but it's expensive oil. It's not oil that's going to come cheap. It's in something called tar sand. And it costs a lot to get that petrol out of that tar sand. It costs like $50, $60, $70 a barrel just to get it out. But there's a tremendous reserve. It's as big a reserve as Saudi Arabia had back when Saudi Arabia started. Now what's happened is Saudi Arabia, they claim, well, we got the biggest oil reserve on earth and everything, but they've been sucking out of that oil reserve for years and years and years, and they won't let anybody in to do an estimate on how much they got left. But this other oil reserve that's in the tar sands is as big as Saudi's oil reserve was when Saudi started. That means it's enough oil there to supply the world for a long time, but it's going to be expensive oil because it's in tar sands and it's hard to get it out. Anyway, that's in Canada, by the way. It's called the I think it's in Alberta. It's the tar sands. It's a huge oil reserve. It's the last really big oil reserve next to Venezuela. Venezuela's got a big oil reserve, but Venezuelan oil is very thick, extremely thick oil. And Venezuelan oil, you know, they've got a lot, but it's not as much as the Canadian reserve. The Saudi claims to have a lot more than anybody, but they don't have it left because they've tanked it all and sent it all off. All those years during the 1970s, 1980s, 1990s, 2000s, all those years, for like the last 40 years, we've been driving on Saudi oil. You know, We've been using a lot of it. They've been sucking it out of the ground. It was really the best oil reserve on Earth. It's a country where the oil come bubbling up out of the ground all on its own. Uh, so now what we're going to do right now is we're going to head back over to the Dow Jones Industrial Average, and we're going to refresh the page. Let me see, 10:30. It should be good. Yeah, the market's down 16 points so far today. That ain't much. 26,138. She's almost at her all-time high, which was 26,616. She's only about 500 points away from her all-time high. You know, this market is completely oversold. I would not buy into this market, to be honest. Now, when the hyperinflation starts, this market is going to go to the moon, along with everything else that's been suffering, like gold, silver, everything else has been suffering. But hyperinflation is what's going to drive this market up. And basically, this market's not going to be worth much because it's going to be priced in hyperinflated dollars. So, I mean, at that point, it can go to 100,000, 200,000, doesn't matter, because it's like a Venezuelan market at that point. And that's what's really coming, ultimately. And it's coming pretty soon. That's going to be the driving force behind the cryptocurrencies, is that hyperinflation that's coming. But we're going to go through a period of deflation first, where these markets are going to crash. Deflation will make these markets crash. Hyperinflation will make these markets go to infinity high. So we're in for a crazy times, crazyville. First a deflation, then a hyperinflation. But the deflation is coming, and coming soon. I made a little mistake, guys. My mistake was very simple. I was taking a look at the market cap of cryptocurrencies, Bitcoin, and I was saying $750 billion to myself, and they pulled out they pulled out that money. It came out of the Bitcoin market, and I was thinking to myself, well, simple math, $750 billion, and now it's a $200 billion market capital. And I was thinking to myself, well, that's about a $550 billion difference. It wasn't occurring to me. One of my viewers on my other channel, he set me right on that. And it's not a $500 billion difference, because it doesn't take that much. The way markets work, the real difference is probably more like $100 billion rather than $500 billion. So when the Bitcoin market actually fell back, the amount of actual liquidity that actually poured into the system was probably really more like about 100 billion rather than 500 billion. But still, it's still exactly the same principle involved. If it was pump and dumped, the cryptocurrencies, it would act as a liquidity pump into the system, not unlike quantitative easing. Very similar to quantitative easing. But it wouldn't have been as much as I thought it was. I thought it was $550 billion. It would have been more like 100 billion. But still, it would have had the same effect of, say, 2 months of quantitative tightening, which is $50 billion a month. And so it would counter effect quantitative tightening probably for 2 months. The cryptocurrency market. But now that money's gone now. It's went into the system. It's been used. Just like you, when you get your paycheck, you use your budget, and that money's gone after a month, and you're waiting for your next paycheck. That's the same way with this money that would have poured into the system from cryptocurrency. Now that money's out of cryptocurrency, and cryptocurrency's down. The bubble's popped, Now the Fed is still withdrawing $50 billion every month from the system. That's going to have an effect pretty soon. And the effect might be already triggering in the bond market, So now let's take a look. What have we not touched on today? We haven't touched on the dollar. Here she is, and here she's going down today, the dollar. But you got to understand what she's going down against. Actually, in a way, that's kind of pitiful. The fact that the dollar's being priced against other currencies that should have been dead a long time ago, currencies like the yen, like the yuan, and the Japanese yen, and currencies like the euro, which are all garbage. So the dollar is in there against a basket of garbage, and it's losing steam against a basket of garbage. But anyway, if we get a deflation, that'll help support the dollar, albeit very temporarily. Listen, thank you guys for listening to my show. Like and subscribe, and we'll catch you in the very next market report. Bye-bye, guys.